Welcome back to XRP Financial Horizon. If you've been watching XRP over the past few weeks, today's session is exactly the kind of day that tests your patience and your read on the market. XRP briefly crossed $1.20, held for a bit, hit a session high of $1.25, and then sellers showed up and pulled it back down to around $1.22 by the end of Tuesday's trading. It wasn't a collapse, but it also wasn't the clean breakout a lot of people were hoping for. And honestly, that's what makes today worth talking about, because there's a bigger picture forming here that goes well beyond one day's price action. Before we get into the numbers, here's the one thing you need to understand about $1.20 for XRP right now. That level isn't just a random price point on a chart. For weeks, sellers have been lined up right there. Every time XRP has climbed up to that zone, it's run into a wall. So when it finally broke above $1.20 in Tuesday's session and pushed toward $1.25, that was a meaningful development. The problem is, it didn't stick. Price came back down, and now the question is whether buyers can hold 1.20 as a floor rather than letting it slip back to resistance. That's the whole game right now for XRP traders, and everything else we're going to discuss today feeds into that single question. On the flow side of things, XRP-linked ETFs brought in about $10.68 million for the week ending June 12th, according to data from Crypto.news and SoSoValue. That's not a blockbuster number on its own, but total cumulative inflows into these products are now sitting close to $1.44 billion. Week after week, institutional money is steadily moving into XRP through regulated vehicles, and that kind of consistent demand matters. It doesn't cause price to spike overnight, but it does create a base of buyers who are showing up regularly, regardless of short-term volatility. That's structurally different from the retail-driven pumps we used to see in previous crypto cycles, and it's worth paying attention to. There's another data point from that same report that's more interesting to me than the ETF flows, and it's the on-chain accumulation story. Wallets holding at least 1 million XRP now account for 74.1% of the total circulating supply. These addresses collectively picked up 1.53 billion tokens over the last 6 months. That's sustained buying at a very large scale from a relatively small group of holders. Now you can look at that two ways. On one hand, it tells you there are sophisticated, well-capitalized players who've been quietly adding XRP through the recent price range, and they're not panic selling. On the other hand, that level of concentration means if even a few of those large wallets decide to lighten up during a rally, the selling pressure hits hard and fast. It's a real dynamic, and traders tracking XRP should be aware of both sides of it. Broader markets weren't much help to crypto on Tuesday. Stocks opened with some early strength but lost ground through the day. Oil prices dropped after reports emerged of a short-term diplomatic agreement between the US and Iran, which eased some of the inflation pressure that's been hanging over markets. That kind of macro relief usually gives a mild lift to risk assets, including crypto, but Tuesday showed how quickly that fades when the bigger question, the Federal Reserve's rate decision on Wednesday, is still unresolved. Crypto traders, like traders in every other asset class, were mostly in a wait-and-see posture going into the close. You don't make big bets the night before the Fed speaks. That's just how it works. Naeem Aslam at Zaya Capital Markets put it plainly in comments to Barron's. Investors need to see that the positive signals in the market actually hold before they commit more capital. He specifically pointed to ETF flows, the direction of the US dollar, treasury yields, and whether Bitcoin could maintain its position above the $65,000 to $66,000 band as the key things he was watching. That last piece matters a lot for XRP specifically. Bitcoin is still the benchmark asset for the entire crypto market. When BTC is choppy and uncertain, altcoins tend to underperform, and XRP is no exception to that pattern regardless of whatever Ripple-specific news is circulating. Now let's talk about Ripple and Flutterwave, because this is the most concrete, fundamental development in today's news. Ripple has made an investment into Flutterwave as part of that company's Series E fundraising round. Flutterwave operates across multiple African markets, handling cross-border payments and transaction processing at significant scale, and the company's valuation has stayed at $3.2 billion. This isn't a small startup announcement. Flutterwave is one of the most established fintech companies in Africa, and Ripple picking this moment to deepen its relationship there is a deliberate strategic move. As part of the deal, Ripple is integrating 3 core pieces of its tech into Flutterwave's platform. Those are RLUSD, Ripple's dollar-pegged stablecoin, the Ripple payments product, and the XRP Ledger itself. Reese Merrick, who heads Ripple's operations across the Middle East and Africa, said in his comments around the announcement that stablecoins are increasingly becoming the backbone of cross-border financial activity in the region. That's not marketing language at this point. It's a reflection of what's actually happening on the ground in markets where traditional banking infrastructure is expensive and slow. Faster settlement and lower transaction costs are genuinely valuable there, and that's exactly what this partnership is designed to deliver. Flutterwave's CEO, known as GB, echoed that in straightforward terms. The point of this partnership is faster settlement. And here's what makes this more than just a headline. Flutterwave confirmed that its stablecoin infrastructure isn't something they're planning to launch in 6 months. It's already live with select merchants and running in pilot mode on the Send app right now. Real transactions, real merchants, real deployment. That distinction matters because a lot of enterprise blockchain announcements are heavy on future promises and light on current activity. This one has actual traction behind it. That said, I want to be straight with you about what this means for XRP price in the near term, because the connection isn't as direct as some headlines will make it sound. Ripple expanding its stablecoin and payments footprint through enterprise partnerships is a long-term story. It builds the network's credibility and widens its real-world use cases, which matters for XRP's value over time. But enterprise adoption of the XRP Ledger doesn't automatically translate into immediate spot demand for XRP the token. Those are two separate things, and traders who followed Ripple for a while already know that the gap between network activity and token price moves can be significant. So pulling back and looking at the setup heading into the rest of the week, the picture is clear enough. The 1.20 level is the line that defines how this trade resolves. If buyers defend it and price firms up above it, the recent move looks like a genuine breakout finding its footing, and the next levels worth watching are $1.27 and then $1.30. Getting through $1.30 cleanly would bring in a fresh group of buyers and likely accelerate the move. But if 1.20 gives way and price drops back below 1.18, this whole sequence just looks like another dead cat bounce off a local low, the kind of fake out that shakes out late buyers and resets the range. The risk scenario for XRP right now is that the fundamental headlines outpace what price actually does. ETF inflows are solid but not accelerating. Whale accumulation is bullish on paper, but those same wallets become a source of supply if price gets extended. And Ripple's growing stablecoin business, while genuinely positive for the network, doesn't by itself drive traders to buy XRP on spot exchanges. If the macro environment sours, Fed turns hawkish, Bitcoin drops out of its range, risk appetite dries up across markets, XRP could easily revisit the $1.14 area without any specific negative catalyst of its own. That's just the reality of where altcoins sit in the market hierarchy right now. One more thing to keep in mind as the week plays out. US markets are closed Friday, June 19th for Juneteenth. XRP trades continuously around the clock, so the token itself will be moving regardless. But ETF activity, institutional trading desks, and the broader traditional finance liquidity that increasingly overlaps with crypto will all be lighter than a normal Friday. That can cut both ways. Thin conditions can send price higher on relatively small buying or lower on small selling, sometimes with moves that look more dramatic than the underlying order flow actually warrants. It's worth being a bit more careful about reading too much into Friday price action specifically. Here's the honest summary of where things stand. Ripple is doing real work. The Flutterwave deal has actual deployment behind it. The ETF product is attracting steady institutional money, and large holders are still in accumulation mode. That's a more constructive backdrop than XRP had a year ago. But the price needs to cooperate, and right now $1.20 is the test. It held once today, 2.0 is the test. It held once today and got pushed back. Whether it holds again over the next few sessions tells you everything you need to know about whether this rally has more to give or whether we're just ranging in a familiar band. Watch that level closely, keep an eye on Bitcoin's positioning around the Fed decision, and don't read too much into Friday's volume. That's the playbook for the rest of this week. Thanks for spending time with us today on XRP Financial Horizon. If this breakdown was useful, hit the like button and subscribe so you catch our daily coverage. Drop your take in the comments. Are you holding here at $1.20 or waiting for a clearer signal before you add? We read every comment. See you in the next one.